Hello, welcome to Spy Money. Let's talk about SpyBot Ranger, how it traded today on the London and the US Open today on with RTY one contract. So let's go ahead and go to the charts. And on the chart, you have a lot of lines. At first, it may look confusing, but it's actually really easy. And this is the London market this morning, 3 a.m. So we do an open range breakout strategy from 3 a.m. to 3:10 a.m. And the yellow lines are the lines for the open range breakout. So let's go ahead and bring this a little closer so you can see it. So you've got the open range high, open range median, and the open range low. So your low is right here. So anything one tick and under, you enter short. Anything one tick and over, you enter long. So let's look at how it traded today. So the way I trade it is I enter right there, and then when it breaks through a zone, which would be not really a zone but a level, we'll call it. When it breaks through and then goes to the next one, I immediately bring my stop to the next one. So let's draw out a line here. So right there is a level. So let me make it even a little bigger for you. The way I do it is when it broke through here and then kept going and got to this level, my stop, I bring it right here. So there's two levels here. So since it went through both levels, I bring my stop to there. That's why there is a entry right here and an exit right there. Now with that, there's $160 that was made on that one trade, just one candle, or one contract, not candle, but one contract, $160. And then when it came back up and retested and went through, when it came back down through, I entered another trade. So on that trade, we can actually move that one to right here. One tick under is where I enter. So I did the same thing with the levels. We broke through this level, and then when we went down to this level, my stop was here. And then when we went through this level and went to that one, my stop went to there. And then when it kept on going down and just kind of going back and forth, I would bring my stop to right here. Because this is like a type of zone when you have two levels side by side like this. That is more like a zone is what it's creating. As you can see, it went across. But when it went down and back and forth, I wouldn't have actually got stopped out right there. I would have probably got stopped out right here because I would have allowed this to play, but I would have had my stop right there because it looked like it was going to potentially come back. So that's where I would put my stop on it. And that gives me $425. So right there is $585 on two trades. So then we come back and we just keep watching. We don't enter any trades at all until we get another entry. So all of this chop in here, we don't enter. Now you could have scalped in here and done fine. If you know how to scalp, you would have done fine. But for this strategy, you only enter after it breaks the yellow and comes back down. So right here's another one. We broke and we stayed in the trade, went all the way down, come all the way down to here, and this kind of keeps on going. Now, some people would say, well, what about your stops? Well, when I'm already that far up in my profits, I go ahead and just let it keep on running. So when it come down here, typically my stop would be here for that one. And then when we broke through this one and went to that one, my stop would actually be right there. And then I would have gotten stopped out there. Now, you could have done that, and you would have actually gotten $160 off of that level. Still good money. So you were up, what was that, $585. So that would be $745 that you would be up there. But when you're up, you can leave your stop up, and then when this comes down, then you put your stop right there. So when we had that pullback and then we start dropping, bring your stop to here. So as it keeps on coming down and goes through the levels, you could go ahead, once you break through all this and come down here, bring your level down or your stop down to here. So when it starts dropping, it comes down. And then when it comes down here, if you wanted, you can move it halfway or wherever you want. But I leave it right there. Leaving it right there. And then when this actually broke and started going down, my stop would actually come down to right here. That's where it would be. So my stop would be there. And then when it come down to there and it started, it popped down and then come right back up, that's a lot of money. And I'm up quite a bit, and my goal is $1,000 per day. So this right here would be my stop. As soon as it come down through that and went through, I would be bringing my stop down. So on this one, when it starts dropping, I would have my stop there, then I would have my stop there. So when I get close to my target for the day, I just want to go ahead and secure those profits, and that's where I keep it. Now, you could have, if you wanted, when it come here and bounced, you could have actually entered a trade right off of that bounce and say you got in on that right there. Put your stop down here, and then you have your entry right here. This is not part of the strategy, but you could have done that, and it would have worked out, and you just played it off. Leave your stop here and just let it run as far as it goes. When it gets up to your open range low, that's a good target. There's $680. But if you just chase it with your stop at that point and keep on going, so your stop would be right here, there, and then you bring it up here, and you just chase these candles until you get stopped out. So your stop would actually be right there. So if you did that, right there's your stop. It's $980. A lot of money for the London Open. A lot of money. And it's real simple to follow. If you're a scalper, yes, it's hard to trade this because you're used to just, when you start getting a pullback coming, you want to get out. This is not for a scalper. This is for someone wanting to stay in long on a trade. So if you're wanting to just kind of get in and let the market play out, this is a very good indicator for you. So right here, if we do just add all this up, you got 160 plus the 425 plus the 705, and I think I'm missing a 160 behind it. Nope. And so there's 705 plus, let's say you caught that 980, and this one right here you would have lost $50 on. That's what you would have lost on that. So actually that, yeah, you would have lost $50. That's not the right math. 160 plus 425 plus 705 plus 980 and then minus 50. So you would have made $2,220 trading from 3:10 a.m. Eastern time all the way over to 7:29. So you're looking at roughly 4 hours, just over 4 hours of trading for $2,200 on one contract. That's just a $500 contract. So that's the London. So let's go ahead and look at the U.S. Open as well. The U.S. Open, oops, wrong one. Templates, and we're going to load the U.S. Open. So when we look at the U.S. Open, we've already traded it today. And I failed to mention there's two other trades that you could have gotten off of that. But anyway, that you had over $2,000 plus anything else you want to pick up. So on this one, RTY, and you can trade this any tick you want. You can put it on 50 tick, 100 tick, 1 minute, whatever. It doesn't matter. I found that if you trade on 50 or 100 or 144 tick or so, you can actually see the candles a little bit better and kind of help you decide what to do. On this one, we have different green lines in here. I'm adding this to the indicator. Should be done this week. And when I get it done, I'm going to go ahead and upload it. Whoever buys the indicator will get the free update, so there's no issues there. In the settings, in the back end, you will actually put in what your how many ticks you want for a stop. I recommend 20 ticks for RTY. It works really well. So with RTY, you got 20 ticks. That's going to be there, and then your entry is going to be one tick under. The indicator will automatically put in your risk to reward lines here. So you're going to have your entry right there. It's going to put that in. It's going to put this here. And then it's going to be a 1 to 1, 1 to 2, 1 to 3, 1 to 4, 5, 6, 7, 8. You'll be able to put in up to 100 risk reward ratios. Not that you'll ever use 100, but you know what? Maybe there's someone that's going to be trading a longer time frame and they're looking for something on a higher one, so I added it. This will be done this week. Also on this, there is going to be, you can find it over here. Let's see here. I can find them. There they are. I moved them because I actually typed these in, but it's going to say stop in like 20 ticks. It's going to be 1 to 1 ratio, 2 to 1, 3 to 1. It's going to show your ticks and your dollar amount. You'll be able to pick currency, pips, ticks, price, and there was one other thing I can't remember. You can choose one, you can choose all, you can choose none. So you can decide what it's going to be here. But those are going to be lined up. Let's see, I'll just bring one over here. Those are going to be the choice of the user. So if the user wants them to be on this side, they will be. They can be right here. They can be right below. They can be right in the center above, center below, and they can also be over on the far right. So you can choose where you want. You can actually have them on all of those places if you like. So you'll have that option. But it's going to be to where you can do it the way you want. So look at this one. This is today's trading. And the strategy is yellow to red. That's what we're looking for. So we're looking to go yellow to red. And I know this garbles it up a little bit, but I want you to be able to see what we're doing here. So the actual strategy is to enter one tick under the yellow and close on the red line. That's our strategy. Now you can pick to go in here, and if you wanted, you'd have a lot of money picked up. So if you're just looking to make a few $100 or so, don't necessarily go for the red. Or maybe you just go ahead and let it come down, and then you bring your stop down and kind of follow along your risk rewards or your levels. You can do either way. But a 1 to 1, you're going to make $100, $200. That one, why does that? It should be right there. That's 300, 400, 500, and then you're going to have 600, 700, 800 for your risk to reward ratios. Now, if you just got in and stayed in to the red line, you would have made $1,630 today. That is the strategy for this indicator. Trade yellow to red. It's real easy. Now, on the new indicator, these risk reward, you can choose for those to not even show up on the chart. So you won't have all these lines there. And if you don't have those lines, you're going to have something that looks more like, let's see here, more like this here. Actually, yeah. It's going to look more like this, less garbled. You wouldn't want to, at least I don't think you'd want to pick all of your risk rewards on one time. Maybe you do. Maybe you just want to see where they would be, and then you can kind of play it that way. So you at least know where that would be. The main lines are these. So we've got, this is a fib line, and that's a fib line, and that's one, and this is one. So you got 4 fibs on here. There's going to be a total of 8 fibs that you can put on there if you want. And out from it, it is going to say what they are. So everything is identified, and as you're trading, this is going to be where price is. So this is going to be what you're going to be looking at. So you've got your fib lines. You're going to have up to 8 fibs that you can put in there. They all base off of this low. And then you've got the open range low, the open range high, the medium, and in here you don't trade. You just leave it alone. You can trade if you want, but you know the strategy is to trade under it and over it. That's our strategy. And you can put this on any time frame you want. It doesn't matter. I know some people want to trade like a 15-minute breakout or a 5-minute or whatever. The only thing you do is just change from here to here, and you can do that in the settings. And I'll show you that. So right here is your settings. You can turn any line on or off that you want. So all of these lines are labeled. And then down here are the default settings for the US Open on Eastern Standard Time. You can change these to whatever you want. And then you have your fib levels. Right now they're showing 4, but there's going to be 8 showing. And the way this works is it works off of the bottom. So you have to go 100% and then 50 to get here. So that's 150. 200 would be there for 100. And then your negative would start from here, go minus 50, minus 100. So that's how you would get your fibs. You can put in your, some people trade a 621, a 681, or whatever they want to trade. You can manually type in whatever you want here. Then you've got the zone area. That is right here. So you can change the color of this of whatever you want, and you can also change the opacity of it so that you can make it brighter, darker, whichever. I like a 15. That's my default settings. And you can also check to make it show up or not. I personally like to see it because I want to know where that is. Now once it gets it going and it's done, you could always come back in and turn it off if you want, but I leave it on. Then you have your labels. You can change the font on your labels off to the side. You also have text labels. These text labels is what's on the other end of the this line. You can change it to call it wherever you want. So like on a fib 1, we can call this a 50, and we could call this 100, and then we could call this one a 50, and that one a 100. So by doing that, that will come over here, and we can see we changed those numbers. So whatever number you put in, you can put that there so you remember what it is. You can also change the coloring of these fibs. So if you go to down on the bottom, you're going to be able to change the color of them. You've also got where you can change if you want dash dot or whatever. Yeah, just pretty much Ninja Trader standard. And you can change the line thickness of it. So maybe you've got certain lines you want to be a little bigger. You can change those. This is the default settings that we have. I come up with these colors myself. I like those colors for what it is, and you can pick whatever you want. But if you don't have any color choices, and if you're a follower of my charting and everything, if you keep the same as me and just learn what those are, then it will help you. So that should be good for you. And then, but when you come into the U.S. market, the U.S. market will be right here, and you can trade this on any instrument too. I like RTY because it seems to move not too fast, but it moves. It's not real choppy like NQ. NQ can sometimes chop you to death, and I don't like trading it. But you can trade NQ, ES, RTY, YN, silver, gold, whatever. It doesn't matter. The strategy works on every one of them. You just have to adjust your stops and such in order to compensate for the whipsaw action of each one. So on this one, let's look at this right here. If you would have traded this, according to the plan, one contract would have been $1,630 if you just went short and just held it to there. Now, you could have made more money. I mean, you could have brought this one down and let it keep on going. But the strategy that we use is yellow to red. That's $1,880. But our strategy is $1,630. And you can choose whatever risk to reward ratios you want. This one here, once it goes up and then retest that red line, that is a good entry place. So you could enter here, put your stop down here, and let it go. Now, the where you would be going would be to this fib level. That would be the ideal place at your level. But once it starts coming up and starts wanting to come down, you could actually do the trading where you just follow the lows. So when that pulls back, you go to there. Then it pulls back, you go to here. Pulls back, goes to here, then to here, and then to there. And then when that goes up, and you pull back to there, you would actually get out on that right there. That's $450 of extra money that you would have gotten. And when this come down, I would not be trading down because we had no level that we bounced off from or anything. But when it come down and got close to it, went up, come down, touched, and I actually entered this trade here on my trading this morning. So I didn't enter this one, but I did enter this one. And when it come down and touched, I got in about right here on this candle, and then I went ahead and run it up. So on this one, from right there, and I went ahead and let it run all the way to the yellow line, which is over here. I did $1,580 on this one trade right here. That was this morning. Right now, we are going up. We are bouncing off of this red line here, which is actually our stop target. That is not an actual level. But we went up, we pulled back. Here's a good entry place that you can get in and play this all the way back to one of these levels. So when you get the levels and you play with this indicator quite a bit, you'll start to see that all these levels make sense and the price will trade to those levels. So when we went here, went above that, we kind of pulled back in. Let me make it a little bigger. So right there, we went up through, we come back down, and then when we went up, you can actually put an entry. Actually, it's on a low, but you can put an entry right above that, and then put your stop down here. You might get stopped out, you may not. In this case, you would have made money. So right now, let's say you got in right here, and you went up, and let's just say you held your stop there and just gonna let it run. It has gone as high as $285. So a lot of things you can do with this indicator. It's your strategy, whatever works best for you. My strategy is mainly to trade yellow to red, which is this one right here. This right here is the target I want. What I want to do is make $1,000 per contract. So when we come down and we hit 8 to 1, I mean, you could have scalped this in here a little bit. When it pulled back up to here, you could have got back in to come back down. But again, the strategy is yellow to red. So when it come down, hit $1,000. If it's kind of wobbling around a little bit, take your $1,000 per contract and call it a day. Maybe you want to make $200 a day. So if you want to do that, you come up here and just look for your 2 to 1 ratio. So you would get in right here and you would be out right on there. So you would be in at 9:44 and out at 9:45. 1 minute, your trade would be done. You'd have your $200. So pick what you want and it'll work for you. This strategy works really well. The indicator is phenomenal. It is by far my best indicator on the website, by far. It is, if you're listening to this video today, as I record it, we have a 20% off introductory that expires on Wednesday, November 29th. Is that right? Today's the 29th. Wednesday, December 1st at midnight. It expires, 20% off. So that coupon expires then. And if it's after that, sorry, coupon's already gone. So if you listen to this video on a later time. But right now, it is 20% off. You can find that coupon on our website, SpyMoneyLLC.com. It's right on the front page. And take a look at it. Having questions about this, let me know. When I get the levels, the ratio, risk to reward ratio levels on here, I will send an update to everybody that has already bought it, and they will get that. That's going to take me a few days to get that on there. So if you buy the bot today and you don't see these, it's just because we haven't put them on there yet. So it is coming. Any questions, let me know. I'd be more than happy to help you. And I definitely would love to see you making money. We also have a training video on this. It goes in a little more depth with some of the highs and lows and stuff, so you can listen to that as well. It's on the YouTube channel. Have a great day.